Here are 8 simple ways for W-2 employees to save money on taxes before December 31st, even if your employer handles your paycheck taxes.
You still have the power to lower your tax bill and keep more of your hard-earned income. Let's break down the steps you can take right now. Step 1. Boost your 41 or 403. Every dollar you contribute is pre-tax, which lowers the income you pay tax on. For 2025, you can contribute up to $23,500, plus an extra $7,500 if you're 50 or older. Even adding $5,000 before year-end could save about $1,100 in federal tax if you're in the 22% bracket. Step 2. Use your FSA before it disappears. A flexible spending account lets you pay for medical or childcare expenses with pre-tax money. Most FSAs expire at year-end, and only $660 can carry over into 2026. Schedule that dental visit or buy eligible health items now so you don't lose your funds. Step 3. Maximize deductions available to employees. Review your pay stubs for deductible items such as union dues, unreimbursed work expenses, or educator supplies if you're a teacher. Small expenses can add up when properly documented. Always keep receipts and records to support your claims. Step 4. Know your IRA options. A traditional IRA gives you a tax deduction now. A Roth IRA grows tax-free later. For 2025, you can make the full Roth contribution if your income is under $150,000 for singles or $236,000 for married couples filing jointly. Above those levels, the contribution phases out. You can fund your IRA for 2025 until April 15, 2026. Step 5. Use tax loss harvesting. If you invest in stocks or mutual funds, you can sell losing investments before December 31st to offset gains. You can also deduct up to $3,000 of extra losses against regular income and carry forward the rest to next year. Step 6. Try charitable bunching. The standard deduction for 2025 is $15,750 if single and $31,500 if married filing jointly. If your deductions are close to that, combine 2 years of charitable giving into one. That may let you itemize this year and take the standard deduction next year. Step 7. Track side income correctly. Apps like PayPal or Venmo send Form 1099-K if you earn over $20,000 and 200 transactions. But card processors such as Square or Stripe must report all payments, even small ones. Keep clear records and report all your income to avoid IRS mismatches.
Step 8. Run a quick year-end checklist. Increase your 401 contribution. Spend FSA funds. Review deductions and side income.
Consider charitable bunching and check for investment losses. Small actions now can mean a smaller tax bill and a stronger financial start next year. For more helpful tax tips and guidance, visit www.mtbcpa.us. Disclaimer: this video is for educational purposes only and does not constitute tax, legal, or accounting advice. Always consult a qualified professional about your specific financial situation.